All right, ladies and gentlemen, welcome back. Today we have again Kimber White of RE Financial and me, Milton Andrade, formerly of Franklin Realty Consultants. I now moved over to Compass, the #1 brand in the United States and the cutting edge in technology. I am a team lead at Polaris Advisors, along with my partner Leon. And today I wanted to just let everybody know what's happening in the world, what's happening in this market, what's happening in Miami, and what's happening nationally. Because I'm sure there are a lot of people that are just frustrated. We've had interest rates go up, 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 and up. And I remember last time we were talking, we are like, they're going to keep bringing these rates up, but I
Yep.
think they'll settle at X. And I think I may have said that they'd be somewhere around 7. But it's been interesting. Tell me, how's it been for you?
The interest rate's been going up quite a bit. Uh, the highest we've had in 22 years.
Yeah,
It's roughly about 7.25 right now, up to 7.5, depending on where you're at. But the market is still growing.
yeah,
I'm seeing houses growing. I'm seeing things grow. They're still growing.
yeah. What I've noticed is that the Fed rate and the mortgage rate, they're not really in line one to one, but the Fed's rate does have a huge influence over the actual mortgage rates, because the mortgage rates are based on Treasury bills or something like that.
Yeah, the
Uh,
mortgage. Yeah, the
mhm.
mortgage rates are based on treasuries, which sometimes if the Fed rate goes up, people run to treasuries, which makes their interest rates go down. It's just a volatile market right now. It's according to what they want to buy. The treasuries, the bond market, they don't work as people think they work hand in hand, because they hear it all the time. The Fed's going to raise the rates. Well, sometimes it's reverse. Sometimes
Yeah.
when the Feds raise the rates, it's reversed because people are running to the treasuries to buy the mortgage-backed securities.
Got it. Got it. Well, what I've noticed is that the buyers that are in the market today that have the courage to buy because they are more informed and they understand the dynamics of what's going on, they're getting better deals today. They're getting deals. Now they're all not only getting discounts on properties, but they're also getting seller paid closing costs. They're getting repairs. They can renegotiate based on appraisal. Like, they have all the keys to the castle right now, right?
Yeah, they do. And the fact of the matter is, as I said, when you look at it, like our markets, especially as you and I've discussed, #1 price, highest price rental market in the United States.
Yeah,
Outside of New York, outside of California, rental. So when people are telling me that there's 8% interest rates or 7.5% interest rates, I said, but you're paying 1,000% interest rate on rent, and you're
yeah,
getting nothing off of it. And the deals, I'm seeing more and more of seller paid closing costs, price reduced a little bit just to help you get into the house.
yeah.
I'm seeing more seller concessions, but I do want to tell everyone, don't think that every deal is that, because for me, I've closed over 100 loans right now year to date, which is still phenomenal in this market.
Yeah.
But with those loans, there's still been bidders. Every house that I've dealt with has 5 to 6 bidders. So don't think you're going to wait on the sidelines and get a lower interest rate and get in a house. And that's something I know you and I are going to talk about today. But the market is still good, and I don't see, it's a buyer's market. I know people say what, but to me, it's a buyer's market right now because sellers are
Yeah.
eager to sell.
It's for the buyers that want to get out there and actually purchase, because I haven't been able to help many FHA first time home buyers since now, right? I haven't really They haven't been competitive enough in the market with the low inventory and the low rates in the past. And now with the low inventory and the high rates, they can still inch in because FHA gives you a higher DTI, higher debt to income ratio. But also now you might be the only game in town for that particular property. And I say go for it every time, because I'm having sellers replace roofs right now to get a deal done. So they'll definitely work with an FHA buyer. And I just feel that the turnkey properties are always going on multiple offer. So I think the Fed actually knows what they're doing. I think that they need to keep at bay the consumer demand for every product, really, but for real estate. because there's this tidal wave of money that is just waiting to get back into the market. Because if you think about it, I heard a statistic. It's like 45% of all the single family homes in the United States don't even have a mortgage, right? 75% of all the mortgages are under 5%. So what we have here is people sitting on a lot of equity, right? Not only that, when we had the COVID lockdown, there was a huge amount of savings,
Yep.
and there's a huge amount of savings. So when people want to say, "Oh, the debt is up," et cetera, and so forth, yes, debt is up for credit cards, especially for low-income folks. But there's a huge pile of cash that most individuals, either property owners that who have owned property for a while, and a lot of normal everyday Americans who are just sitting on a huge amount of savings. And so we're holding the tide back. If interest rates go down too fast, we may see inflation jump again, because that's what happened in the late 70s, early 80s, when the Fed acted too slow and then too fast to go back down. Inflation shot up again, passing its previous figure. And so I think that Jerome Powell, the Fed chair, knows what he's doing, or at least has history as a guide. And what we find ourselves in is a very interesting situation with interest rates as high as they are, inflation that was as high, which is now going down, inventory low, price appreciation happening even in this environment.
Yep.
Can you imagine if we were at 4 or 5%?
Yeah, and I think when you go back to, I agree with you, but the feds are going to, at some point, I think I don't even know that you'll see September raising right now. It's a 50-50 chance. It was 70-30 chance. Now we're saying that we may just stabilize where we are. We did see the rates come down in the past 2 weeks from a high of average of 7.59. Now
Right.
we're back down to about 7.39 on the rates. But the fact is, everyone said we're going to be over 8. We're going to be over 8. I don't think we're going to be over 8 on a conventional loan. But let me go back to your FHA a little bit, because I want to explain that right now, FHA is getting out there, because I've had more realtors go, well, why are they going FHA? Because they didn't want FHA. FHA long term, and this is to educate realtors also that it's out there, FHA is no different as far as doing inspections, except that it has to appraise. But if a buyer still wants to waive the appraisal on an FHA, they can do an addendum and can waive the appraisal. So just because you sign the addendum don't mean you waive. But the greatest thing about FHA right now, when I look at one of your partners, I did the same thing. The client, when I looked at it and I looked at the rate that was there, he was putting 15% down, but it's still better and cost effective for him to go FHA, because we're back at that market. If everyone remembers a few years ago, the market that an FHA loan is cheaper than a conventional. And either way, you're going to have mortgage insurance. So the FHA is the way to go. And also for people who say can't get in right now, there's still 100% programs. They're called flex programs. FHA's put them out. Conventional loans have put them out. So there's a time to buy and put the money in the market right now.
If you can afford it, right? If you can afford it, buy an asset, and a house is your asset. And yeah, you're right. FHA interest rates are always lower, and I'm always surprised to see the interest rates that people are getting with the FHA loan compared to conventional, because every little bit counts right now. But what I have seen is the folks that have really gotten in now because they can afford it, because they're stable, they're going to be living here for a while, this is their primary residence, they need the space, they have to buy, and they purchase their home, and even at these high interest rates, they are appreciating. Right. One thing I always ask myself before I ever go buy a property is, if it didn't increase in value, would I still mind living here? Right? Would I mind putting money into it if it didn't go up in value? What is it big enough for me to live in for the long haul? And do I like the neighborhood? If all those things are in line, buy the house. Right?
I agree.
There's a lot of folks out there just sitting on but it's not fair. In the 80s, when people were paying 12, 14, 18%, their prices were so much lower. And it's just not fair, because our affordability is harder today. Sorry, guys, it's not going to get better. this isn't a fair world, right? This is just life. It's just life. And you got to deal with the facts on the ground, not your emotions. Right?
And the market that you're seeing right now is, you and I talked about it. I think you said, Barbara, it's so funny, you know, Barbara, you said Barbara Corkin said it, and I said it. You have to look, as Milton just said, the flood of people that are holding back. These are the buyers. So I want you, the rates are going to go down. They are going to go down. They will go down next year. What goes up, come down 35 years. It's a secular. So it's going to go down. But let's talk about what happens when it goes down next year. So now let's just say we're in the third quarter, which we're predicting probably late second quarter, early third quarter, rates going to go down just say 6%. That's what we're predicting. That's what we're thinking. What happens then? Two things happen. You now get all those buyers who are sitting on the sidelines who decided they're not in the game. They're just going to watch the game. They're jumping in. You're going to have the sellers at that point who may think that they're going to go, okay, maybe it's worth it. I'm sitting on $500,000 worth of equity. I'm at a 3.9% interest rate. You know, it's okay for me to go to 6% now. And actually, my rate will be a little bit lower because I have more money to put into it. So now they're back into the game. Yeah. And now the incentives that you're going to be getting, that you're getting now, isn't going to be there. So the money that you're going to save is not going to be there. And you're also losing out on current equity. And as I tell people who say, well, I can't afford to buy, let's just take that same house that you're looking at, a $4,000 a month range rent for a nice home. That's 12 first, last, and security is what they're asking. That's $12,000. If you're looking at FHA on a $500,000 house, you can get up to 1% down if you need it, but a minimum of 3.5 seller's contributions. You can get in that same house within $3,000, $4,000, $5,000 more than what you're going to pay someone else for their rent, and you're building equity in a home.
Right, exactly. You know, and what I've seen people now purchase homes that are over appraising, right? You know, their property appraised by $15,000, $20,000 more, right? And they got seller paid closing costs and discount points, and they got their rate bought down. Like that deal of a lifetime only happens at times like these, right? Because inventory is at an all-time low. We stopped building houses at the rate that we needed to since 2009. We've never caught up to that rate. Now, some people will say, well, prices are dropping in Austin. Yes, prices are dropping in a lot of areas that have land to build, and where that new inventory has actually alleviated pressure on home prices. That is not a crash. That is supply and demand. And when supply meets demand, prices go down. So what we have here in South Florida, in particular, hyper local to our area, is we are not making any more land, right? Because we did before. We took it from the Everglades. We're not making any more land, right? We got what we have, and we're not getting any more. And so when people come here and they go, oh, but the house is so old. I know, but it's in Coral Gables.
Right.
Yeah, it's old. It's in a historic neighborhood, right? It's in a non-flood zone area. Yeah. It's built in 1925, but it's all brand new windows, doors, electrical, this, that, and the other. Go to New York. I lived in a house that was 150 years old. It was a great house, right? And so, I think people's perception needs to kind of line up with the reality of, I want what I can get until I can get what I want. And you do that through monopoly, which is the game of life here in the United States. You buy your starter home, you move into your intermediate home, then you buy your dream home. Okay, you can't start at your dream home. You just can't. Right. And I think that there would be fewer buyers today needing help from family if they purchased something a little bit more realistic, right? Buy yourself a multifamily, buy the small home in the upcoming neighborhood, but get started. And I personally, I've bought and sold many homes for myself, for as long as I've been doing real estate, and even before then, and after the crash 2008, 2009, I had to sell off everything and start fresh. But I got back on that horse, right? And then I bought that multifamily, right? And then I bought that single family. And then I bought that other single family. And then I bought that other single family. But the problem is I never sold anything, right? Because every home that you buy can become your investment.
Right.
Right? That's how you become an investor. It's not I have $1 million and I have to go buy a building. No, the home that you're in becomes your investment.
Right.
Especially all these folks sitting on this tremendous amount of equity. That is your investment, right? And if you're wondering, I'm wearing the Inter Miami jersey because the game is today. and Leo Messi moved to Miami, right?
Yeah.
This is a beautiful paradise, right? This is an amazing place to be, an amazing place to live. You know, and let me just tangent really quickly and Inter Miami. Finally, we're going to be getting a stadium soon, but they're playing in Fort Lauderdale. But what's happening is Miami's on the map. Everybody wants to be here, right? And so when you look at the influx of new residents to the state, the income brackets have doubled in Miami-Dade, Broward, Palm Beach, and even Martin counties. So even though they would say that our population has decreased by 0.5%, the wealth that has moved in is also the reason for price increase. And so that just makes it even more of a reason that if you live and work in Miami, Miami-Dade, Greater Miami, you need to own a home.
Right. And I would say that even though it decreased 0.5%, like you said, it's the wealth that's moved in. But it's also, if I go back and do statistical looks, it is not the homeowners. The majority of people that have moved out are renters who cannot fit that demographic, who moved to North Carolina, a much lower priced area, an area that's not as much as far as cost of living. But it's most of them not home buyers. And if you see that, you see that statistically, home sellers, you know that. But when we look at last year, what was the #1 state that people migrated to last year? Florida.
For the last 5 years.
But last year was of all of them.
Yeah.
This year, we are on target to surpass last year's numbers in Florida. South Florida is going to pass. So we are growing faster and faster, and there's no inventory. There's nothing there. So people are willing to pay.
And jobs are moving here.
And jobs are moving here.
Jobs are moving here. High-paying jobs.
When I moved to and I'll give this to everyone, I moved here 18 years ago to Fort Lauderdale. And it was a little town with 2 skyscrapers, as they call it, and it was a Bank of America building, tower, and it was the Heisinger building that was there. And that was it. There was a couple of things. And now we've got skyscrapers and literally we're getting ready to build, I think, a 60-story building in Fort Lauderdale. And Miami, the skyline was nice, but
we got 1,000-footers now.
Yeah, you got New York. It's growing and it's going to continue to grow. I brought my business here 18 years ago, and I know the changes, and I don't see the market slowing down as far as housing market. And so we're a different area, and we're going to continue growing because everyone wants to live here.
Yeah, and I don't know about you, but my business has maintained.
Yes.
Right? Because I got to pivot with every single change that's happening in the world today. It doesn't mean time stops.
No.
Doesn't mean time stops, right? People are still being born. People are still dying, getting jobs, getting married, getting divorced. People, life is still happening. And so we just have to pivot. We all have to pivot with the market, with the economy, with the world today, and just deal with the reality, right? Let's deal with the reality. The 7% interest rate is not actually that bad.
Well, I'm going to say something. It's not, but I'm going to go back to not as much as pivoting. This is the market to where a professional like you and a professional like me who've been around and knows the industry and knows how to make the deals work, knows how to get things done, knows the products. They have more than one tool in the toolbox. They know, they've seen the market, they've seen what's happening. We've been here before, and that's what I want everyone to know that's listening. Milton and I have been here before. And people are like, oh, you're not going to take the little time. The experience matters right now more than ever. Experience in our industry matters, and that's why I'm happy and excited to partner with Milton and Compass and the Compass team because the fact is he's experienced, he knows, he can call me and say, hey, Kimber, this is this. Can we do this deal that you do? Or what do you think about this? And he's already thinking ahead. You know, you're thinking ahead of what can we do to make something work. And I'm already going, yeah, Milton, this is the product. This product works. This is the way it works. It's not, oh, you're cookie cutter. Oh, well, you can't do that. Oh, this house needs renovations. Hey, Kimber, can we do a 203K? Hey, Kimber, can we get creative in financing? Here's our situation. Let's figure it out before we go into the deal. And that's the type of help that someone wants right now. And if you're a realtor listening, or if you're in our industry listening, you got to pivot. You got to have more than 2 tools in your toolbox. You got to have more than a hammer and a screwdriver in your toolbox right now.
Yeah, and for home sellers and for home buyers, you know, it's really important that you're dealing with somebody that is a professional that has seen this before and knows how to compensate for the market to get the desired outcome. You know, I think there's at least 3 clients that we're working with right now who were burnt out and frustrated, had worked with other agents, were not able to secure a deal, and were ready to give up. And we were hosting open houses all summer, multiple open houses every weekend. And my inventory was kept decreasing because we kept selling the houses. But if I had just left it on the MLS, waiting for other agents to sell it, it would not have sold. But by leaving the house open, we were able to get 5 times more traction. And now, happy seller, happy buyer. And so many of these buyers were getting outbid. They were getting outpriced, and they didn't have anybody that was really taking care of them, you know. And so I am very happy that just this month alone, 3 of them, first-time home buyers, now are in a great home at a rate they never thought that they could possibly get, with seller paid closing costs, rate buy down, repairs on the home, you know. And that's what makes me very happy, because at being in this business for about 21 years now, it's the clients whose life I have changed because I sold them their first home.
Yeah.
You know, it is remarkable how dramatic a change that is for an individual, because we now have your housing expense fixed. You've started building that equity. You've started building that wealth. And every dollar that they are paying to their mortgage, they effectively get back when they sell. You know, I saw another statistic where they're like, well, don't buy a house. It makes no sense to buy a house. Home prices don't really go up. If you adjust it for inflation, the nominal increase in the home prices over the course of the last 50 years is 1%. I go, great. Right. But rent is 100%. Right? You're always paying somebody else. That's an expense. That's a fixed expense you're never going to get rid of. It's going to go up, right? But when it's your personal home, every dollar that you pay to live in that home, and even repairs included, when you sell that home, you're getting that money right back. And you're taking your wealth and you're putting it back into another better property. And that's ultimately it, you know. But you just have to, you got to know that's how this system works. And real estate cycles have happened in the past, and they will happen again. And you can't necessarily time your life, but you can make the right decisions to work with the right people and to get in your own an ownership, get into home ownership and own your first home, your second home, your third home. But do it. Never quit. Never get out.
And you're right. And again, I can't stress enough to people, don't sit on the sidelines right now. We have so many people who sat on the sidelines when the rates were 6.5%. That was less than 8 months ago, guys. And the rates are going to come down. We're going to wait. The prices, we're going to get a crash and we're going to wait. We are now 8 months later. We have over 7% interest rate, and we have home prices that still have a 5 to 7% increase in value. I have people that bought a year ago that are calling me going, are we ready to get rid of my PMI yet? And I look at it in some areas, I'm like, well, you know, you did finance 90%, and yeah, you did actually do have that equity in there. Let's get an appraisal and get it done. And they're a year in, not all areas, but some areas are a year in. So the fact is, buy now, don't wait. There's what the market, it's a good time. You don't need 20%. You don't even need, you don't, as I said this, 3% down, 1% down, 0 down. zero down. Yes, I said zero down. There are programs that give you zero down. And there's still, because, you know, if you're here at Hometown Heroes is gone, but there's a lot of programs. Remember, this administration, this, whether you, no matter, I don't care about your political records, but this administration is putting more programs out than anyone in recent history to help the first-time home buyer and minorities get into a home. This may be one of the few times in history, we don't know what 2024 elections bring, we don't know what the administration's future, but right now, it is one of the first times that there's money out there, there's programs available, there's assistance from Fannie Mae, Freddie Mac, these are the agencies that buy your loans, FHA, that want to get buyers, wealth income equality, minority buyers, into a home, the average Joe buyer into a home. They want you to have home ownership. They're investing government money, federal money into this. So don't sit there and go, oh, my friend says it's 20%, or don't let a down payment deter you, because there's ways to get it.
Exactly. Here. Value add. You know, you're going to be making that home your own, right? And as you do that, you're adding value to the home. I was able to get rid of my PMI in 8 months. Right. And I have never put more than, well, actually I did, because I did the DSCR 20%, but I had never put more than 10% on any of my personal homes. I think the first one was 3.5%, the second one was 5%, the third one was 10%. Right. Only it was the fourth one that was 20% because it was DSCR for a multifamily. But you know, you don't need that much. So yeah, 100%. I agree with you. How can people contact you today if they had questions?
They can call me at 954-696-1435, or go to refensor.com and go and inquire right there to me. I'm available, literally, Milton knows it, 7 days a week. So even if you see something on the weekend, you call me, even at 9 o'clock, 10 o'clock, 11 o'clock at night, you literally can call me. That's what I'm here for.
Last contract we won was because Kimber took the call at 7 p.m., got the approval at 10 p.m. on a Saturday. We got our offer in at 11 p.m. on Saturday. We had a contract on Sunday, and nobody else can move that fast. So hats off to you, my friend.
Thanks.
All right. Well, thank you so much, Kimber.
Thank you, Milton.
I'm Milton Andrade again of Polaris Advisors, powered by Compass. And until next time.
Thanks, Milton.
Go Miami.
Yeah.